Good morning, everyone. This is your market update for July 1st, 2026. Let's start with last night's key signals from Wall Street. The three major indices closed virtually flat. The Nasdaq finished at 26,213.72, the S&P 500 at 7,499.36, and the Dow at 52,319.20. However, the mood turned slightly weaker after hours. As of this morning, Nasdaq futures are down 0.57%, S&P futures are off by 0.02%, and Dow futures are barely positive, up 0.03%. This reflects a cautious tone from investors as we enter a data vacuum period. On the individual stock front, several high-beta names experienced dramatic moves. Let's look at the verified catalysts. Ambarella surged as much as 28% during the session before closing up 3.54%. The trigger was a Rosenblatt analyst naming it a top pick for the second half of 2026 with a target price of $120, driven by accelerating demand for edge AI vision processors. The stock has now gained 36% over the past 5 days, and the risk of chasing at these levels has clearly increased. Fuel cell energy rose about 21% yesterday and has gained 67% over the past week. The catalysts include a strategic agreement with Fit Energy USA to provide up to 380 megawatts of clean power for data centers, plus a $49 million financing commitment from the U.S. Export-Import Bank. The AI data center power demand story is becoming the core narrative for the clean energy sector. AeroVironment surged 18.75% after reporting fiscal fourth quarter revenue that grew 133% year-over-year, with earnings beating expectations. The small drone and military robotics space is benefiting from defense budget expansion. MaxLinear gained 16.55% yesterday, bringing its 5-day gain to over 50%, supported by growing demand for optical interconnect chips in AI data centers and a confidence boost from a KeyBank non-deal roadshow. But here is the important caveat. While all these stocks have broken above their 200-day moving averages and entered acceleration phases, the short-term gains are massive. Fuel cell energy has already achieved 100% of its catch-up potential. Without fresh catalysts, the probability of high-level consolidation or a pullback exceeds 55%. If Nasdaq futures turn positive today, which they are not at -0.57%, these names could push higher, but the overall risk-reward ratio is no longer attractive. Now let's check the global macro thermometer. The 10-year U.S. Treasury yield is at 4.49%, up 1.74% from the previous day, reflecting a further solidification of expectations that the Fed will keep rates high. A break above 4.5% would trigger a liquidity tightening signal. The VIX Volatility Index is at 16.84, still within the normal 15 to 25 range, but it rose 2.37% intraday, indicating sentiment shifting from greed to neutral cautious. If the VIX crosses above 20, we need to watch for a risk aversion reversal. The dollar index DXY is at 101.50, in a weak consolidation pattern but showing a slight intraday rebound of 0.22%. A weak dollar supports emerging market valuations, but a break above 102 would pressure risk assets. WTI crude oil is at $69.17 a barrel, down 0.83%, pressured by oversupply concerns and weak global demand expectations, which is negative for the energy sector. Spot gold is at $4,030.10 an ounce, up 1%, benefiting from a weak dollar and safe haven demand, though stable inflation expectations limit the upside. The market characterization here is that we are in the late stage of a risk-on environment, with selective structural plays. Tech bottleneck stocks and AI infrastructure are attracting capital, but high macro interest rates and falling oil prices are capping overall risk appetite. The failure condition is if the VIX breaks above 20 and Nasdaq futures decline more than 1%, which would quickly close the risk-on window and require a shift to defensive positioning. Turning to the renminbi and the external environment for Chinese assets. The onshore dollar-yuan rate is at 6.7814, with the yuan strengthening 0.16%, while the offshore rate is at 6.7997, slightly weaker by 0.02%. The onshore appreciation reflects the central bank stabilization efforts, and the spread between onshore and offshore has narrowed to 180 basis points, meaning short-term depreciation pressure is manageable. The impact on foreign capital flows into a shares is limited as long as the rate stays in the 6.78 to 6.80 range. A break above 6.80 on the onshore rate could trigger net outflows through the northbound connect. On the technology restriction front, the U.S. has recently expanded its list of Chinese military-linked companies and upgraded communication equipment bans, while also tightening reviews on critical minerals and transshipment trade. No major new verified events have emerged, but supply chain risks continue to pressure the semiconductor equipment and materials sector. For shares today, we expect a higher open. The Shanghai Composite closed up 0.44% yesterday. External sentiment has not deteriorated, and the renminbi is stable. We are looking for a small gap up of 0.2 to 0.5%. The failure condition would be if the offshore yuan weakens sharply above 6.82. For today's A-share market forecast, the Shanghai Composite is likely to trend higher in a volatile manner, potentially testing the 4130 to 4150 area. The Chi-Next index may stabilize and bottom out, driven by tech stocks. The failure condition is if northbound net selling exceeds 3 billion yuan at the open, which would shift the outlook to a volatile decline. The most likely active sectors today are AI computing and optical communication, as well as data center power and new energy. The overnight moves in AMBA, MXL, and FCL have already transmitted to their share counterparts in optical modules, server power supplies, and hydrogen energy. These sectors are at technical breakout levels and attracting high attention. On the risk side, avoid traditional energy and real estate. Falling international oil prices are pressuring the oil and gas sector, and the policy outlook for real estate remains unclear. Semiconductor equipment and materials have long-term logic but are subject to short-term technology restriction disruptions, so chasing highs is not advisable. Northbound capital is more likely to see net inflows today. With the onshore renminbi stable, the dollar weak, and share valuations relatively low, if net inflows exceed 2 billion yuan in the first half hour of trading, we could see total net inflows of over 5 billion yuan for the full day. Key signals to watch are whether the renminbi continues to appreciate after the open and the usage rate of the Shanghai Connect quota. Here is the one-sentence core judgment for today. AI infrastructure bottleneck stocks and clean energy benefit from structural capital flows, but high macro interest rates constrain any major broad-based rally. Stock selection is more important than index direction.